All right, pretty much top down. Right, we know this. We've been saying this for weeks. Right, this is pretty much this all over again. All right, last May all over again. We're pretty much with the same bias. All right, now the only thing is the issue that DXY has been presenting over the past, year is that, right, we aren't receiving any decent pullbacks before we continue lower, right? The pullbacks are very steep. Or not very steep, pretty much very narrow, not too deep, and it's pretty much given us, very, very short-term retracement, right? Longer-term retracement. So this is something that's weird, in terms of understanding condition, understanding if, this is actually a realistic play, right? Well, the thing is steep. It was very relatively low correction here, another relatively low correction, but it's bigger than this one. So this correction is getting bigger, and then this correction was pretty big too, right? So I'm more so worried, right, about this reversing on us than actually, giving us the target that we pursue, even though it makes all the sense in the world to really come here, just because we've already given, we've already taken out the preliminary leg, given a disruption of order flow, and we gave a pullback, which mitigated from a perfectly good position, and then is now giving us, a move to the downside, reaction to the downside. So the only thing, right, that's like the only thing that's pretty much bothering me is the fact that every retracement is getting steeper, right? And we're also, getting into these premium levels that, even though this is considered counter trend, right, it is becoming, a bit off. Like, for example, look at where we're reacting from right now. All right, this is where we're reacting from right now. Right, and the issue here, right, if we start zooming in, right, final leg mitigation, give us a strong leg down, pullback, potential unwillingness because we took out preliminary level of structure. Let me note that out here. Right, preliminary level of structure was taken out, solidified low, right? The solidified low came before we took out the targets, which is unwillingness, right? Hence why we came for this extremely deep retracement, and then we gave another leg to the downside. So I like this because it shows willingness to want to go higher, but insufficient enough to break structure. So insufficient enough to break structure, a new structural range is formed to the downside, right? And as you can see, we have an H1SC, M15 wick inside of SC, right? And that is where we're reacting from currently. That's where we reacted from, I believe, last night. Yes, it is, right? So this is currently in play. This structural range is in play because this took structure, right? But also keep in mind that, right, we came into an inefficiency, right? We reacted and we created a solidified high. So this is a high low retracement, right? So if price gives you or takes this out, right, then technically you can consider a change in momentum. Why? Because you've now experienced pretty much a disruption of order flow, because order flow already attempted to give a mitigation, right? That mitigation took out preliminary structure, but it didn't even take out, these lows here. So it could reverse on us at any moment. So pretty much this entire area, right, especially now during Asia, during London, is going to give us an incentive on whether we're going to continue lower or if we're going to break out, right, and maybe even break another POI, right? Because the only way that this disruption is now invalidated is if we take this out, we react, right, and then we give those levels of structure break to then get a conservative entry to then give you more downside. That is the only way the disruption is invalidated, right? If you see, maybe you could say there's a POI here and there's now a counter, a counter disruption, right? And that will then give you an incentive to want to sell down, right? So it's very 50-50. I'm curious to see what happens during London, right? And pretty much go from there. But overall, EU's just been super sloppy, right? And we'll come back to that in a bit. But just looking at EU, right? Right, looking at EU. I'm gonna leave that there. Right, our full structural range is still intact, right? Meaning our target is still here in the long run, right? Now the issue, right, is if we're going to get a pullback or not, right? We've already given an impulse, right? And even though it's been sloppy, extremely sloppy, for example, well, this was London, this was an Asia session, right? And this was literally a new day open. So it's been extremely sloppy and extremely unfavorable in terms of when it's been happening, right? But if we're looking at overall structure, right, we see our structural range is still bullish, right? But we see that we had essentially, right, let me actually do this here, right? So now the issue here, right, is that we have, you know, essentially a high was taken out after a low was created, which made this a solidified low. So this could easily be seen as an structural range, right? And we can easily see a reversal to the downside. Not even a reversal, excuse me, to the downside, but we could start easily taking out liquidity, right? The reason why this is, you know, a very interesting point of interest to me, just like this is, right here, too deep for me, not interested. Anyways, the reason why this is so interesting to me is because there could be a scenario where, just thinking from a liquidity perspective, right, our intradays are still bullish, right? Our intraday is bullish. We came into a turbulence point, we reacted, and we gave a push to the upside. So when we start zooming in, same thing here. We're giving a bullish scenario to the upside, and then we gave a pullback into this turbulence point, gave it to the wick here. Now my issue is that it happened late in New York, and this pretty much gave you a liquidity grab. And as you can see, I had decisive here because price hadn't actually, prices are around here. But as you can see, the decisive point is now taken out. So this is now seen as a liquidity grab, right? So if there is any type of sell scenario, let's say we come into a pullback, right, maybe give a scenario here, right? This is now coming into equilibrium area. And so if we have any type of bullish move for London, right, because our intraday is still bullish, right, here and here, right, and because this low actually hasn't even taken out a preliminary level of structure, this is still not a solidified low. Okay, this is not a solidified low, so this could still very easily pull down. But the thing is I would rather prefer this to give you, you know, that push up to solidify this low based on low high retracement, right? Because even though structure is still bullish here, I would much rather see a type of liquidity grab up here, right? Obviously, if you consider POIs to the left, I see two. Well, 50% here, but I believe it was it H4? Yeah, H4 wick and H4 wick, right? So it's very interesting to see if we would see some type of liquidity grab, and then maybe for the next couple of weeks or so, not even weeks, but maybe the next week or so, we could actually take liquidity out, right? Because remember, liquidity is a charging factor, and if we obtain it, you know, we, you know, essentially catch fuel to give you the move that will pursue the next liquidity point. So I would really love to see, you know, that liquidity grab, and then we take out liquidity. This is from late New York, right? And then this is from Asia session, right? So if we take that liquidity out, who's to say we can't mitigate up here? I mean down here, I'm sorry. Right, and let's say we do come up here. This is already, is that touching a, yeah, it is touching a discount if we do touch those levels, right? So it makes a lot of sense, right? But the thing is I cannot assume that, right? I cannot assume that this is going to make a liquidity grab. But a good sign to note in my eyes is, right, that we're pretty much, let's just look at this. The distance from this high to this high is longer than the distance from this high to the newly formed high, right? So it's a substantially smaller high, right? Meaning momentum is decreasing. So in order for momentum to continue higher, or switch to a low, or switch to the direction of down, I don't know why that sounded so wrong. Anyways, in order for either of those to happen, you now need a catalyst, right? If you have a catalyst in play, then you can get a follow through. So I'm very interested to see this. Right, we take it out this decisive point, right? I want to see maybe something to happen in this turbulence point here, right? See an interruption, and then maybe something during London. Hopefully wake up to something, right? So that then we can see whether DXY wants to disrupt, maybe take this out too, create an overall disruption, right? Internal disruption, external disruption, and then create, you know, a momentum shift, which means then we would target relative equal highs, right? But we cannot target relative equal highs if we do not have the disruption supporting the bias. Does that make sense? Right, is that making sense? Right, and if that does happen, right, then that would mean that this move in reality did not make sense, right? And this is now an inefficient move, right? And all this came to do was mitigate that daily POI we were just pointing out. So if this is an inefficient move, right, then if we have the disruptions in play, then we can target liquidity, right? And that would mean this was an inefficient move, right? Because this mitigation still doesn't really make much sense to me, right? So that could even be a, you know, a type of model per se, you know, an inefficient pricing, an inefficient move model. But anyways, yeah, that's pretty much it for these two pairs. Touching up EG, right? Remember what we talked about in the pair breakdown? Why I'd rather just close majority of the position here, right? Instead of waiting for the overall target to be met, even though it was met, right, after London Open, I mean after New Week Open, right? The issue was, right, is, right, let's say we were here, right, it was 3-4 pips away from target, but the invalidation point is 36 target, I mean, well, here, I'm sorry, 9 to 10 pips down, so the RR made more sense for me to just close now instead of trying to hold out over the weekend, right? And if we look at structure, if you look at what happened immediately after that, right, you could see the definite momentum shift here that took structure, right? So even though we came to this POI, right, that promoted or encouraged bullish order flow, that bullish order flow then was meant to meet inefficiency, right? And then that broke internal structure, not overall structure, and then that came for inefficiency, and then this is now just no man's land, right? So I'm pretty happy that I'm out of this. But if we're looking at, you know, current price, right, this is a break of structure. That is a break of structure, right? Especially if we start holding out here longer, right? That is still considered bullish structure, right? Because if this would have reversed immediately after this reversal pattern here, right, and taken out here, then that is considered a liquidity grab. But it's now held itself in the area, so I now consider that a full BOS. But either way, right, if this is, you know, something you're looking along, keep in mind you are in heavy premium in terms of low high. But yeah, anyways, that's pretty much wrapping it up for today's technicals. But I do have a question. Or unless you guys have any questions. Do you guys have any questions and we can cover something? Pretty sloppy today, I agree. One of those days. Yeah, so always make sure you're playing inside of your ranges, but you're also you gotta also acknowledge that if you're only trying to play with structure, you're only trying to play with POIs inside of structure, that is still a linear way of looking at the chart, right? And that could still go very wrong. So just make sure you're applying theory, applying logic, right? And actually justifying your position, not just entering positions. Something that's very hard to do, and it's not something that's kind of teachable. It's more so something that you have to figure out on your own. But anyways, yeah, do you guys have any questions? None for me. Cool. All right, so if you don't have any questions, I do have a question for you all. Has everybody watched the video that I uploaded? What day was that? Was it Saturday? It was Saturday, I think, after the Zoom that I uploaded it, the taking a step back. Right, has everybody watched that? Or listened to that, I'm sorry. Alright, cool. Make sure you watch that, because if not, what I'm about to ask probably won't make sense just yet. But I mean, the overall topic of the video is to take a step back, okay? So my question is, do you guys understand the principle behind the topic that is being talked about? Taking a step back. What is the principle behind that? Because it's a talk that I actually had with myself earlier today before just a random talk I had with myself. But do you guys understand the principle behind taking a step back? And it's something that's very, very hard to do. It's only like 5 minutes long anyways. It's not anything long. But yeah, anybody in here, how many people do we have on the call? 16. So out of the 16 people in here, only 2 people have watched it. No, that's more so a derivative based on the title of the video. Take a step back. What does that actually mean? What are you actually doing? Right, and you kind of said it in that sentence, right? But I'm looking for like one word or one type of word. You said it in your sentence. To become more fresh. Kind of. Yo, this dog, that's my neighbor's dog. Annoying ass little pit bull. But anyways, okay. Mental reset, kind of. Reevaluate. Now, what does reevaluate mean? That's a word that I'm looking for. Here's another one. It's self something. Self-regulate. Don't think too hard about it. You're close. I mean, it's literally this pretty much the same word. Yeah, self-reflection. There you go. Look yourself in the third person. Yeah, so pretty much it's just self-reflection. It's a type of self-reflection, right? So self-reflection is actually really hard to do. I don't know if you guys have tried it, but it's actually really hard to do, because it's hard to look at your life from an objective point of view, right? Just because it's our life, and obviously we're biased by our emotions, experience, age, maturity, etc., right? So taking a step back is a form of self-reflection, because you're taking a step back and you're removing yourself from the situation that is at hand, whether it's you're doing good or bad or in between, right? You're taking a step back, so you're evaluating your performance from an objective point of view. So therefore, it's a type of self-reflection, right? So the concept, taking a step back, comes from the principle self-reflection, right? Just like self-reflection could be applied to not only taking a step back, maybe to fixing a habit, or, you know, I probably wouldn't be able to think of them off the top of my head. But anyways, right, I actually had a talk with myself, right? And I asked myself, right, And I even asked myself today, because EU has just been super sloppy for the past 2 to 3 weeks, and I was like, yo, like, what is going on? Like, you know, like, I would usually catch 2 to 3 amazing trades a week, right? So what is going on? Right now it'll be, you know, maybe a good partial and then a break even. Like, for example, today, you know, I didn't cover this, I'm sorry, I completely forgot. But today, right, I said that your POIs today was actually very unrealistic, right? It did not make sense for me for price to come this deep to then give another retracement to the, to then give another impulse to the upside. That just does not make sense to me. Especially if you play EU, right? These deeper retracements only happen in the term, in the point of reversal. They don't really happen in the trend, right? Here, like for example here, high, low, not too deep, right? But now when we're reversing, right, reversal, you get a premium, right? That's kind of a way of looking at a pair tendency. But anyways, right, it did not make sense for me for this pair to move this high up this fast to then just come right back down to mitigate something to then make a new higher high. That does not make sense to me, especially if we're looking at momentum, right? Momentum is slowing down, especially during session, right? But during session, right, I was looking at during session, I was looking at this right here. Okay, I was looking at the inefficiency in play, but before I took that, I'm trying to remember exactly where it was. Oh, it was right here, I believe. Oh, right here. Let's see. It was. So this was April 20. I'm trying to remember exactly where this was. I'm sorry, I'm looking at the wrong spot. Anyways, here. Okay, I was looking at. Right, looking at this morning. Right, I wasn't looking at this. I'm sorry, I'm looking at that the wrong way. I was looking at this inefficiency in play here. Right, that made a whole lot more sense to me. So I knew that if I got a good entry on a smaller time frame, then it would make a lot of sense for it to continue. Right, so my initial POI was here. Right, so this gave me a really good reaction. Right, if we're looking at price here, right, we're seeing, right, high, low as in our final leg to the downside, but order flow must continue here. So my play was actually based on M2. Right, yeah, right here. Literally just playing the inefficiency there, and there was the below here was a 30-second. Okay, I played it in between the M2 inefficiency and I played it to the bottom of this wick, because this wick created, you know, the move that caused a potential disruption here, internal disruption. So my entry was here, right? And it actually, you know, met TP1 in terms of intraday, right? Hence a partial here, but the invalidation point is now here, right? So we came in, mitigated that, came higher, did not break structure, continued bearish order flow, and then caused an internal disruption, which then led to a disruption here, which then led to the disruption here. So once that happened, I saw it as a disruption to the downside, and that this leg could now be high, low, retracement, continuation, right? So it's now extremely messy. It's later in the session. I'm not too interested anymore, right? But I'm thinking to myself, right, I used to hold trades for months, for weeks, right, with no issue whatsoever. Right, now I thought to myself, why was the case, right? Taking a step back, right? Why is it that I used to, you know, just hold these trades forever, and then now I'm more so worried about catching these these 10 pip moves that, you know, I'll take a partial and then it'll break me even, you know, and that's only, you know, if it's a 1 to 7, you'll get like a 2%, you know, trade. So it's just like, look, right, comparing to how I used to trade, it used to be more so looking less on smaller time frame and looking more on higher time frames, and I was trading more pairs, right? But because now I've obviously understood my pairs, right, the pairs that I trade, right, I narrowed it down, and I've now, you know, pretty much stayed with, you know, trading intradays and the occasional swing, right? But in terms of, you know, the trader that I came up to be, you know, just telling myself that doesn't make sense. That's not how I came up. Why am I changing that, right? So me personally, right, I thought to myself, and I'm like, that doesn't make sense. That doesn't, why am I doing this? Why am I doing this now, right? So instead of worrying so much about these intraday plays, right, why not go back to my roots and look into more pairs, right, and focus on higher time frame, right? Because if, for example, right, when we're thinking, you know, if you're thinking, you know, oh, how can you trade more pairs if you're not focusing on pair tendencies? Well, can you guys list out just random pair tendencies that you've seen? Like, for example, me with EG, I always see, whenever I'm looking for entries, I'll usually see a wick out of the POI and then a mitigation of that liquidity grab, right? That's just something I see. Right, so can you guys name just random pair tendencies that you've seen? Does the new style make more money? What do you mean? No, not necessarily about how much I make, but how much more exposure I'm open to.
No,
That's my issue.
I was trying to understand what would have caused the shift in the style of trading, because I'm saying, you said you come up doing a lot more swinging and more long-term trades, but I'm saying now over time, what would have caused that shift to the lower time frame, shorter, you know, scalps? Is it?
Oh, okay, I get what you're saying now. I get what you're saying.
Yeah.
So yeah,
But
so
for me, it could be a couple things. I'm thinking maybe it was either the amount of money that you're making or the need to be in front of the charts for less time, or maybe now you're reflecting on it because the market is choppy. So I mean, if you do have a longer term trade, the way the market is moving now is like you should get stopped out inevitably because it's just ranging, you know. So
exactly, and
those are the
also
two options I'm looking at.
And also, an issue that I found with swing trading was my scaling out. I would scale out too much too soon, right? And then obviously you add swaps, you add commission to it, but commission is only a pip, right? But then adding swaps over time, right? And then you see your pairs ranging over time, right? That's something that you're not able to control, able to, you know, you're able to play against it, right? But it's not something you can control, right? So I believe naturally I was forced into trading more intraday trades because my pairs were ranging more and they weren't giving too many swing opportunities, right? Which is also roots back to, you know, not being able to swing because there weren't too many swing opportunities available, right? So even though, yes, I know my pairs, I know the tendencies, environments change, times change, right? And so, you know, now I feel like I become a victim of that. So what am I going to do to fix it? Right now I can just fall back to my roots, fall back to what I came up as. Like, for example, looking at, you know, just looking at more pairs, but focusing on overall bigger POIs, right? And then holding those trades for the long run, right? UCAD big retracements, IMO, a lot of pullbacks in between main movement, right? So I don't know about you guys, but majority of the tendencies that I've seen are more so for smaller time frame, right? Or most of the tendencies that I use are for smaller time frame, but for the most part, structure remains the same, order flow remains the same, right? Schematics remain the same, right? But when it comes to entry, when it comes to smaller time frame, that is when most of the tendencies come into play. Am I wrong or am I right? Do you guys agree with that, or is that not something you guys agree with? Because it obviously varies by the pairs that you trade. Right, so majority of the tendencies that we see are in smaller time frame. And keep in mind, those are the same tendencies that we see, right, are proclaimed to be noise, right? And they're proclaimed to be noise because not only do they shift, right, but they aren't always the same. They always act differently, right? So smaller time frames are mainly where you're gonna find your tendencies, right? So to avoid that issue, right, to avoid tendencies for the short term, right, why not fall back into my roots? And this is me talking to myself, it's not me talking to you guys. This is me talking to myself. Why not fall back to my roots, right? Give it a shot, right? Go back to trading a bit more pairs and then going from there. So what am I gonna do? I'm gonna add a couple pairs to my list. All right, so I'm gonna stay with the parameters of dollar because I still like to primarily trade New York, and I'm not about to change my sleep schedule to fit London or to do anything like that, just because the schedule I'm currently on allows me to be extremely efficient. Right, so what am I gonna do? I'm gonna add two pairs. I'm gonna add AUDUSD and I'm gonna add USDCAD. Right, and since we're already on this call, since these are pretty much gonna be blank, right, why not break these down with you? Would you do indices? Yeah, I would do indices, right? I would do US 30. US 30 would be another good one because US 30 actually moves a lot during New York, right? Especially during the stock market open. Right, so essentially, right, as we're starting from an overall perspective, right, what am I saying? Right, I am seeing, right, potentially, I'm seeing that price could potentially come back up here, and if price comes back up here, then this is now seen as a liquidity grab on a monthly time frame. Now, will we chase that liquidity? That is the point of smaller time frames below this. Right, so what do I see on a weekly? Nope. Okay, yeah, there we go. I was doing it wrong. Anyways, what do I see on a weekly? Same old, same old. I see this is all of the COVID stuff, right? The reaction, and then we came into a bullish break of structure, causing bullish structure. So now that as we go into our smaller time frames, I'm sorry, right? I now see low, high retracement. Order flow and structure is definitely to the upside, right? So coming into smaller time frame, right? I am now immediately following this because we are bullish, right? So now what do we see? Current range. Right, what do we see in our current range? I see hold on, my bad, I thought I heard something. Anyways, low, high, right? Deep retracement that took out preliminary level of structure. So this essentially gave a super deep retracement, right? So that naturally high, low retracement came up for a liquidity grab, right? That solidifies this low because we came up and took out this high, right? So now this is our current structural range. Oh, I'm sorry, you could even go all the way down here, right? But right in the internal structure, what I'm seeing, right, a potential liquidity grab there, right? So this is promoting a bullish bias, structural range to the upside, retracement, structural range to the upside. So because this is now a solidified low base because we took that high out, I am bullish, right? So deriving a bias, I'm sorry, let me go back to H2. Right, I am curious to see what happens here because we are currently in a mitigation in play. Right, mitigation is in play. Right, and we are even approaching a POI here. Right, but then there's also 50% here. Right, so let's keep looking. And this SC here is actually standing out to me because it actually took that liquidity out here. So actually, let me, right there. right? Took liquidity out there. So this is a very significant move because after this liquidity grab, we pretty much created the high that led to the mitigation, right? So we're currently right in this POI here, right? So, but in order for this move to come back into a POI, we need bearish structure, bearish order flow, correct? So best case scenario, right? We sit around here during, during Asia session, Asia session, give it any move to the downside, give a liquidity grab with London, and then give me something during New York to then give higher. But I'm only basing that because of the immediate range in play. And keep in mind that we are still potentially coming for monthly liquidity, right? So, right, who's to say we don't come into maybe H4 wick or somewhere inside of this wick to then give a move to the upside. So that's pretty much how I would go about creating a bias. Obviously, I'd make it look way prettier than that. I'd do a bunch of squares, a bunch of lines, you know. But that's just to show you guys, right? So that would give me that bias for AU, USDCAD, same thing. What am I seeing? Right, unwillingness because we took structure. That's the reason why I'm seeing unwillingness here. So anyways, technically on a large scale, this isn't considered no man's land because we're stuck in between the range, right in between here and then in between here, right? We're stuck in the range, but this is monthly time frame, so it doesn't really concern me too much unless we're in something like this or something like this, like right, with something like this. How do I know this? Because I remember Chris would always trade this and I would never understand why. Anyways, so momentum is definitely to the downside, right? The next set of monthly liquidity is there, right? I'm now going through my time frames. Heavy bearish, heavy wicks to downside, heavy bearish, right? Focusing now, trying to focus on structural ranges in play, right? This is now inside of, right, a daily wick POI here. So we have to keep looking down, looking at my time frames. What do I see? Right, I see liquidity has been cleared and then gave an immediate reaction to the downside because we took this level of structure out, even this level of structure out primarily, right? This is now seen as a liquidity grab. So our overall momentum is bearish, but our movement is also bearish. So keep going through the time frames. Right, so because this low was created by this high, right, we then took the preliminary levels of structure here, gave a pullback, and then this is our wick high. So because this led to a preliminary break of structure here, this is now our solidified high based on high, low retracement, right? We then come lower, right? There is a structural range in play here. Structural range, retracement did not take out preliminary level of structure. I then came lower, retracement, lower, retracement, lower, retracement up here. Right, I would have seen this as a continuation based on that mitigation. So current structural range intact. Here. Right, so this is the current structural range intact. There's obviously a very significant POI there, but there's also a POI. Okay, I probably wouldn't use that inefficiency on M30, but it's just something to be wary about. So who knows? There is that POI, and then there is this POI, right? So the only issue with me wanting to play something here is the fact that we're also inside of a daily POI. So this is something I probably wouldn't touch right now. I'd more so be interested in AU. But best case, you know, obviously you continue lower. Right, but yeah, that's pretty much how I would go about looking at brand new pairs. Right, who knows, I'll maybe even add US30 on there. But yeah, I'm probably gonna start going back to my roots, going back to focusing on higher time frames and focusing less on these 10, 15, 20 pip moves. Right, because at the end of the day, I only need 1-2 trades a month and I'm pretty much good for the month, if I'm being honest. But anyways, what did you guys think? UJ just crazy? Nah, I've never ever traded UJ like that, honestly.
No, I think Juan was saying UJ was a good pair to play, but I only trade UJ actually, but sometimes the moves are just whack. Like you can't really see them. They don't really work with structure too much. Sometimes though, it's pretty clean. I'm not gonna lie. But
let's see.
There's sometimes it's just crazy. But before you move to UJ, I was trying to look at a chart you just marked up a while ago. I was saying the fact that you highlighted the daily POI, were you looking to have a rejection BOS on a smaller time frame and then a rejection from that same
I see
area
that.
to continue bullish?
In terms of intraday, yes.
Yeah, but if we don't get that BOS, then or
I mean, you already got the BOS here. And then it already came back into a discount.
Would you consider that a BOS or more so a disruption or?
No, it is a BOS. Look right here, right here.
So it's not like a high.
Well, look, we've already like we had a low, we retraced, and then we broke preliminary levels of structure, solidified high, unwillingness, break of structure, came back into a discount. As you can see, took liquidity. There, super messy, super sloppy, which is what you like to see with these bullish pullbacks when you're in bearish structure. But it still is considered a bullish break of structure.
Okay.
So the thing is you need that bullish break of structure to come back into the premium levels.
Okay, and then so, that level that you highlighted in pink now, what would that be? That would be the high time frame structure. So we're expecting a reaction from there.
Well, I mean, now looking at it here, there's even a wick there. So I mean, yeah, it really just depends on, with me, whatever happens once New York opens. Right, because there's obviously deep retracement POI here based on the immediate leg, but the overall leg, that would be considered a premium. Or you could be looking at a continuation inside of here, maybe turbulence point. But the thing is we're acting from daily POI, so I'm not really too lenient on this. I'd more so want the higher retracement, and if it fits time of day, then it, you know, makes a lot more sense.
Wait, what was that about time of day?
Well, like New York, this is a USD pair, so I naturally expect it to move during New York, correct?
Oh, I thought you were just looking for you know, actual time periods or time pockets there.
No.
Or are you just looking at the general session?
Yeah, general session.
Okay. All right. I'd be curious to see what UJ looks like. So.
No, UJ I probably won't trade if I'm being honest. I'm good on that. I would have wanted to trade UJ when it was down here.
You know what's crazy, bro? I had UJ marked up the very low. If you go down to the 16-hour, there's an inefficiency, and I completely missed it. But on the higher time frame, UJ, I mean, it gives good pullbacks. Yeah, I that daily too. That was a good buy. And if you go down to the hourly, it gave a more conservative entry.
I see. That is perfect. That is perfect.
50%. And then if you go lower, I think to the 30-minute, it filled the inefficiency to the pit.
Oh, I see that.
Yeah, like that. So UJ, yeah, it's a good pair.
When did this move? Okay, it's moved during London. I see that. That's definitely your type of setup right there. But I mean, as you can see, there's even order flow in play here.
Is that the one efficiency? Is that what you call it?
Yeah, he calls this one efficiency.
What does that mean?
That's his model, bro. That's his model.
Okay.
Yeah, so he pretty much trades his intraday and swing inefficiencies. That's pretty much what he trades.
Okay.
But yeah, anyways, do you guys have any questions? Do you know how pips are calculated in US30? Let's look at US30. It is, I believe, so US30 works on points, right? So 1 point is 10 pips. It's like gold. Right, so you see here from 33.21, 33.21, I mean 33.921 to 34.053 is 132 points, which is 1,300 pips. Yeah, Stone is a beast at US30. He's just been doing his own thing though. Good for him. That's how it should be. Uh-huh. I can't hear you. I think you need to speak up a bit, please.
Can you hear me now?
Yeah, I can hear you.
I want to say that EURJPY and pound yen, these both pairs also like give optimal entries in the New York session that main hour, which we trade overlap in the start of the Intra session. So I mean, you can also trade them if you are looking for minor
To each his own.
entries.
To each his own.
What?
To each his own. Everybody, like to each his own. Do you know what that means?
I mean that they give proper optimal entries, like proper pullbacks in the Intra session. So you can trade minor intraday moves in those as well. Like it's a misconception that EUROJPY and GBPJPY don't move in the NY. So I just was clearing that out.
Oh no, I mean honestly any pair can move in New York. Because it's essentially when, especially in overlap, because that's when you have the most volume of the day.
Yes, but I've seen that they give proper optimal entries with proper pullbacks in those timings as well. So yes, you can trade them as well. But
Yeah, I mean,
those are just minor intraday moves, not like major moves.
Definitely. Like, I mean,
So
that's
I've seen that, yes. Yes, you can continue.
See, the swing started in Asia session here. I'm happy this finally started moving though. This was ranging for a while. But yeah, anyways, do you guys have any questions? Excuse me. Any questions? Are we good? I know I still need to add the other languages, and I know I still need to start the one-on-ones, but I've just been a bit carried away with school season. I mean, it's final season, so you need to just be ready for that. But yeah, if nobody has any questions, we can just end it off here.